And this was why you said before we started, you still get triggered sometimes of everything else. I just realized that this is a personal journey from every single person going through this.
Exactly.
And all of the people going through it. If this was going to continue, it has to look like this. And all of this misinformation has to look like this. And all of the different versions of what reality look like have to look like this. And I don't begrudge somebody from what their version is. I can completely, I can respect somebody immensely that has a different idea for what this is and a different version, and I can still learn from them, even if I might not agree with them on this on what it is to me.
If you've been in Bitcoin long enough, you've probably noticed something strange. The deeper you go down the rabbit hole, the more confusing everything starts to look. Prices swing wildly, narratives constantly change, and even Bitcoiners themselves seem to disagree about what Bitcoin actually is. But according to Jeff Booth, this confusion isn't a failure of the system. It's actually exactly what the transition to a new monetary network should look like. Because Bitcoin isn't just another financial asset. It's a completely new monetary protocol that challenges the rules that have governed money for centuries. And when something that big begins to emerge, the process is never smooth. It's messy. It's controversial. And most of the world misunderstands it at first. So if Bitcoin feels chaotic in 2026, Jeff Booth says that might be the clearest signal yet that something much bigger is unfolding beneath the surface. And in this video, we're going to break down what Bitcoiners should really expect next, and why this bear market might actually be part of the journey. If you're serious about building real long-term crypto wealth, then you need more than just an exchange. You need structure, security, and smart strategy. And that's where iTrustCapital stands out from the crowd. iTrustCapital is the platform designed for investors who want to grow their crypto tax advantage portfolio while having full control. With a self-directed crypto IRA or their premium custody account, PCA, you can invest in 80+ top cryptocurrencies, physical gold and silver, and trade them all 24/7, seamlessly, safely, and simply. Here's why thousands of crypto investors are making the switch. Tax advantages that help you keep more of your gains working for you. 1% transaction fee and no monthly fees, cost-efficient wealth building. Institutional-grade custody that puts asset security first. 24/7 trading access to all supported assets. Multiple funding options, rollover, transfer, ACH, and even in-kind crypto transfers. Fast setup. You can sign up, fund, and start investing in minutes. And this part is important. iTrustCapital eliminates the slow, outdated, and overly complicated systems of traditional IRAs. No more paperwork headaches. No more friction. Just a clean, easy way to move your money into the assets you believe in most, safely and legally. And here's a great perk for getting started today. When you sign up using the link below and fund your new iTrustCapital account, you'll receive a $100 funding bonus. It's an easy boost to kick off your investing journey. Just use the link in the description to claim it. So if you want your crypto strategy to scale into something bigger, smarter, and built for the future, check out iTrustCapital through the link in the description. It's the platform designed for investors who want to grow, not just speculate.
From that viewpoint of it's a store of value first, right? We've always had stores of value. You've needed a store of value because you couldn't store your value in money. Because money's always been broken. Mm-hmm. So what gives the financial system a belief that it won't be centralized and work, and that's what's happened to gold, is a store of value is everybody thinks that it's underneath the monetary system, and then you have a broken monetary system that is the opposite of the free market that has to concentrate faster and faster. And that monetary system that's centralizing and it's still theft on top of that system. Because and it's faster and faster theft, and then it has to break the rules of the centralization, right?
Yeah.
So it has to change gold, the rules. It has to confiscate or attack another country to take it to maintain its advantage. And so that's the world that we've always known. And that's why people think things turn into a store of value first and then a monetary system, because we've never known something that was a protocol, that was a network, that was both at the same time.
Yeah.
We've never. So So I understand why you would believe that, and I understand, but now ask, if everybody did that, and it had to be a store of value first, what would be the implications of those actions?
One of the biggest debates inside the Bitcoin community is this: should Bitcoin just be a store of value, or should it actually become a medium of exchange? Jeff Booth argues something radical. The reason people needed stores of value like gold in the first place is because money itself was broken. Fiat currencies constantly lose value, so people store their wealth somewhere else: real estate, stocks, gold. But Bitcoin changes this dynamic completely. For the first time in history, you have a monetary network that can be both a store of value and money itself. And if Bitcoin only becomes a store of value, Jeff Booth warns the system could capture it the same way it captured gold.
What would be the implications of the centralized actions? Then all of the governments would all the rails to it. And then what would they do? Now remember, we're not dealing with any type of technology we've ever dealt with. We're talking about a surveillance state with AI and surveillance state and capabilities that you can't even imagine how fast it's centralizing. When you look at Palantir, when you look at Pegasus and everything, they're already monitoring everything you're doing. You can be shut off on YouTube tomorrow. Your voice can be drowned inside this surveillance state. X, all of this thing. And there's right now almost a fight between the bankers and the technocrats. And the technocrats own the means of production today. And people are taking sides within that, believing that they're safe, their new god, which is centralizing faster, right? And they're using all of the same rails into that. So now if you just keep on asking that question, what would it look like if you had surveillance capabilities over the entire population? Even if they were in self-custody, but you were still operating in the other system. Do you think Bitcoin could? Because what would happen after that is you would launch an attack, you'd launch a chain split that you can only use my Bitcoin, and that chain split would be really dangerous for the people that were the small number of people, and the people that weren't using it as a medium of exchange, and there was no privacy in it, and such. Now the nodes, people running nodes, and you'd only have to. I'm just going through kind of what you would expect to see, even though some of those are dark things. What you'd expect to see is put a couple people in jail, kill a couple people, say that have an event so bad that this group over here created a false flag, and drive people into saying you can only use US coin.
Yeah.
And I think under that type of attack, most people running Bitcoin right now, especially if they made a whole bunch of money in US coin, wouldn't be Bitcoiners anymore.
Now, Jeff Booth introduces a darker scenario. Imagine a world where governments and corporations fully control financial infrastructure. With AI, data tracking, and digital identity systems expanding rapidly, financial surveillance is becoming easier than ever. Booth warns that if Bitcoin remains just an investment asset, it becomes easier to control, because governments could simply regulate exchanges, track transactions, or even push alternative digital currencies. In extreme scenarios, he suggests the system might even attempt a chain split attack, creating an alternative version of Bitcoin controlled by institutions, which means Bitcoin's future doesn't just depend on price, it depends on how people actually use it.
It's funny how everybody is wondering is so concerned what other people should do, right? And in this, what you're really saying is, I don't want to store it, I don't want to spend it as a medium of exchange, and that is your right to do. But if people don't, then you won't activate the network as fast. You won't. There has to be people that do it early, and I've made a decision to put my energy into the world that I want to see. And I have no problem spending in Bitcoin and then trying to make more in Bitcoin. I have zero problem with that. I think so when you said the rational thing, the rational actor is making the best interest of their against their beliefs and what they want the world to turn into.
Yeah.
And so there's a whole bunch of rational actors, and then there's also rational actors that will take that and say, instead of accepting a system where I'm losing money. I'm paying 2.5% to 3.5% credit card fees or bank fees to take money that's losing money.
Yeah.
Right. But which is most of the rational actors in the world that you're talking about.
Well, or oblivious, but they're just doing it, right? They're just doing it.
Again, they think they're rational actors.
Yes.
Then there's other people who are going to say, "Fuck it all. I am going to give a discount to people who are using my service that pay in Bitcoin.
Yeah,
and I'm going to make more margin.
Yes."
And so I'm going to win the market by cutting out the middlemen and being peer to peer. And as I do that, and so all of these things are happening at the same time, and there is no one audience. And in some countries, it's not 2.5% to 3.5%. It might be 10 to 12%.
If people don't use it, the network won't activate as fast. Here's the paradox Jeff Booth highlights. Everyone says they believe in Bitcoin, but very few people actually use it as money. Instead, most treat it like digital gold. Something to hold, something to speculate on, something to sell later. But Booth argues that if Bitcoin is going to challenge the existing system, people eventually need to start using it inside real economies. And interestingly, this adoption isn't happening where most people expect. It's not starting in wealthy countries. It's starting in places where the existing system already failed.
When you have a protocol or a new technology, it always starts not from the monopoly, who has vested interests inside the monopoly, and you in Europe and me in the US, we're in the top of the monopoly.
Yes.
So we wouldn't see what happens at the people that we're extracting from being at the top of the monopoly, how they might use this and move value from the bottom up. And technology always moves from the furthest way. The people most hurt by a monopoly go first. So why El Salvador went first is totally logical, right? Why other countries are racing. We invested in a company that did 800 million in transactions 2 years ago, 2.2 billion in transactions in Africa, 2.2 billion last year, probably does 7 billion in transactions in Lightning and Bitcoin transactions this year. Makes perfect sense.
Jeff Booth explained something many Western investors miss. Bitcoin adoption doesn't start with billionaires. It starts with people suffering the most from broken money. This is why countries like El Salvador adopted Bitcoin early, and why Lightning payments are exploding across parts of Africa and Latin America. Booth even mentions companies processing billions in Bitcoin transactions annually across developing markets. Because when banking systems fail, Bitcoin isn't speculation, it's survival.
What makes me so positive that this is going to work and stay decentralized and secure and impose its building and layers and everything else and do exactly what I suspect is I'm in that environment every day.
Yeah.
I'm talking to those people every day. I'm talking to the builders who are never going back, who are building this. I'm going into the circular economies. I'm watching what's changing. I'm watching the people move from fear to hope. Thousands of them. Right, who are adding their voice to this network and spending more time in building into to this network, and I'm also watching people who never knew this unlock and move exactly what you just described. Pieces, sometimes store value first, then I want to learn a little bit more. How do I move more time into it? I'm watching the entire thing. But what would it feel like if there's, call it 10,000 people over here and 8 billion people over here with all the misunderstandings of everything else about what Bitcoin is, that it's a protocol, that it's emerging in layers? What would the world look like in the noise of the world today? It would look exactly like this. It would be really confusing because most of the people were, and every single person, whether you were in like the thing I was talking about, Peter, with your version of the world, you would think you knew better than everybody else, and those other people were crazy. And
for sure.
And so it again. The change is not Bitcoin, the change is us.
If you're confused about Bitcoin in 2026, Jeff Booth says that's actually normal. Right now, there are roughly tens of thousands of builders deeply involved in Bitcoin and billions of people who still misunderstand it completely. That imbalance creates massive noise. People outside the network think Bitcoiners are crazy. People inside the network see a future others can't yet understand. And the result? Endless arguments, volatility, and confusion. But Booth says the real transformation isn't happening in Bitcoin. It's happening inside people.
So right now, the hands in the air and everything else about the price and everything else, you have a network expansion that is exploding. I was in a network expansion that was exploding in the early internet. I built a company there, and in 1999 to 2000, everything collapsed. Amazon, I think, went from $128 down to $3. Everything collapsed. Our company just barely survived through this. But when you looked at the internet and the traffic and the people building things and what was happening, it was like straight up to the right. And then you had a pricing event that collapsed and everybody got flushed out. Nothing changed.
No,
nothing changed. No. You had a protocol network and a network effect that was exploding, and nothing changed. And today you have the exact same thing in Bitcoin. Oh, the price, and because they're all measuring it from a piece of paper, that is the thing that is giving the centralized control more structure, more power. Mm-hmm. So obviously that's a really hard concept for people to understand. It feels really easy to me because I've been saying it for so long. But when I watch people make decisions on this network, they're constantly making decisions from trying to compare the old to the new. And like you said, they're 180. They're totally different.
To explain Bitcoin's volatility, Booth compares it to the early internet. In the year 2000, the dot-com bubble crashed. Tech stocks collapsed. Amazon fell over 95%. But something fascinating happened beneath the surface. While prices crashed, the internet kept growing. More users, more infrastructure, more development. Jeff Booth believes Bitcoin is going through the exact same phase today. The network keeps expanding, even when the price falls.
And all game theory is really how we act, right? What is the best interest of us, and how do we act under different scenarios? So if you add payoff matrices to game theory, and one payoff matrix, you won't get caught. And then another one, I'm going to keep on increasing the reward. I'm going to start at $10, $100, $1,000, $1 million, $10 billion, $100 billion. I'm going to keep going higher and higher and higher. What you find is I've seen as low as 2.5% of people will not take the money. But that, by the way, what I just described shows why money's always been broken. Because 97.5% of people will say, I won't. And by the way, if you watch Mr. Beast, or if you watch Survivor, these shows are built on that. And why they're so compelling is because we're watching and asking ourselves, could we? Right? And what you see is the 97.5% of people always take the money. And you see, and you see it over and over and over again, and then the 2.5%, and then you celebrate. Wow, that person was so great, but they walked away with zero, and you forget about them, right? Yeah. So which might be a different version of what we're talking about, but yeah. What the 2.5% of people, and this has been consistent throughout history, I think, because that's how we're wired. What they're saying is I couldn't live with myself if I did that, right? And what most people are saying is I need to do this before somebody else does it to me for my family.
Yes,
right. They're not bad people. They're not everything else. So if that's been the entire history, and by the way, you could actually probably tie this into, you might be able to tie this into religions, you might be able to tie it into everything else, or any significant leader that was killed. What would it look like if you were the lone wolf that was so dangerous to the system? And then what would it look like to those people as we celebrated in them the thing we couldn't hold in ourselves, right? What would the observer effect from the person who was standing out there? It would be really dangerous for a control system because they were above it. But it would be lonely. and they would most likely be killed over time from the control system. So what Bitcoin gives us is, and through the consensus mechanism and what this is, those 2.5% of people typically aggregate, they run nodes, cypherpunks, they run, and anonymity, right? And so you don't have to poke your head up and everything else, but as there's thousands of these people, that is the backbone that protects Bitcoin. And now it gives the 97.5% of people who aren't just bad people, some probably 2.5% on the other might be, right? But the 97.5%, they just don't have the ability, just given a choice if somebody's going to cheat them or they're going to get cheated, they'll cheat somebody before they get cheated. Mm-hmm. But now they can cooperate on an honest chain. And so it moves the entire world in the direction of what we're talking about, and more people can see themselves in it.
Booth introduces an important concept from game theory, the prisoner's dilemma. Most people will choose short-term personal gain over long-term collective benefit, which is exactly how the fiat system operates today. Politicians print money. Corporations exploit loopholes. Individuals chase short-term profits. But Bitcoin changes the incentive structure, because instead of trusting people, it enforces rules through code. And according to Booth, this allows the small minority of principled actors, the 2.5% who refuse to cheat, to protect the entire system.
And so watching people make this journey into this thing, and the number of people that have, and why I'm so excited and just grateful to be here, right, in this time in the world, is when I know the thousands of people on the front lines of this who are fighting for a better future, and they're not even fighting for a better future, they're building a better future. They're literally, their energy is inside this thing, and more all the time. It's so crazy hopeful. The little fights and everything else that you should expect along the way, if this is going to work, they're nothing burgers to me.
Jeff Booth ends with a reality check. Bitcoin isn't just a new asset, it's a new global monetary architecture, and transitions like that don't happen quietly. They involve misinformation, political resistance, internal conflicts, and massive volatility. So if Bitcoin feels chaotic right now, that might be exactly what this transition was always supposed to look like. Jeff Booth believes the most important thing happening in Bitcoin today isn't the price. It's the builders, developers, entrepreneurs, communities, thousands of people quietly building the infrastructure for a completely new financial system. And while the market focuses on volatility, those builders keep pushing forward. Because the real story of Bitcoin isn't the price, it's the network effect. And if Jeff Booth is right, the bear market of 2026 might eventually be remembered as just another moment when the world misunderstood what Bitcoin really was. Thanks for watching. Please don't forget to like and subscribe. See you in our next video.